Well, hello there, everyone. It looks like we're going live, so we're about 1 minute behind schedule today. I hope you're all doing very well. It looks like Plant One, Pat Lim, Gilly Monster, you're already in the chat. You're already saying g'day, so that's awesome. I love to hear from you, so if you are out there and you may just be lurking, that's okay too, but just say g'day. We always love hearing from people, so jump in the chat, say hi, ask a question, do whatever you want to do. It's a great day for it. As you can see behind me here, we're here in Melbourne, well, outside Melbourne, I should say, and I think it's a bit glary. So you'll have to excuse me for 1 second. I'm just going to try and clear this up a bit. So seems like it says smudged, says Plant One. Well, I hope not. I think it's just a very, very bright day where I am here today. Let's have a look around. Yeah, I think what we have... Oh, there we go. I think that might be a little bit better. Maybe we'll do one more. I'm actually on the road today. So normally I'd be filming in the studio or at home. Thanks, Plant One. I appreciate that. And today, we're actually filming from Daylesford, which is just outside of Victoria, just outside of Melbourne, in the countryside of Victoria. So it's a lovely part of the world. If you haven't been down here, get down here, support your local community. So today we're talking FAANG stocks. And as always, we're here for SelfWealth Live, which means you can find us on Twitter, you can find us on Instagram, you can find us on Facebook using the hashtag SelfWealth Live. It's my absolute pleasure to be with you. My name's Owen Rask. I'm the founder of Rask Australia. G'day, Amit. Wonderful to have you back, mate. I feel like you've been here almost the whole time I've been doing these, so it's great to have you. Devon, always a pleasure. Devon, you're in Daylesford too. What are the chances? That's wonderful. And Vic says, nice. Good to see you guys. Today, we're going to be talking about FAANG stocks, and we might find out that it probably should be renamed MANG stocks, as in M-A-A-N-G, and we're going to just try and discover, and I'm going to lift the lid on the individual FAANG stocks which I own and why I own them. And you're going to discover that maybe I'm pretty fortunate to have these two already in my portfolio, but there could be some more good times ahead. So you might be thinking, well, is this a little bit boring to be talking about FAANG stocks? I don't think so, because I think these companies are excellent. Not all of them, but I think some of them are truly just fantastic businesses to own. G'day, Howard. Always a pleasure. It's an absolute pleasure because it is sunny. There's not much else we could be doing today other than talking about stocks over our lunch break. So I thought maybe we can just jump straight into it. If you have any questions, remember, you've got to fire them away in there, in that live chat. And if I do answer them, remember it's limited to general financial advice only. And what that means is, if I answer a question, it's important to remember that I don't understand your situation. So we're just talking about investing in general here. We're not talking about specifics to your objectives or goals, and definitely not your risk tolerance, because we've all got different risk tolerances. So if you need that type of information, if you need someone to sit down with you, you need to speak to a financial planner. You can find out more at the Rask Australia FSG, that's rask.com.au/FSG, or visit the Financial Services Guide on the SelfWealth website. If you have any support questions, while Rob and I are here today, and we're here to help you out as much as we can, we love those support questions to go to selfwealth.com.au, and then there's that instant support widget down the bottom corner there. Two final things. Number one, remember, until 2022, it is free ETF buys. What that means is you can invest in an ETF, and I see that Krishan has already put something in there saying NDQ versus FAANG. So NDQ is an ETF from BetaShares. FAANG is another ETF from ETF Securities. Remember, you can buy ETFs for $0 brokerage. If you're going to buy an ETF, now is probably the time. Second of all, US trading. You can now trade into the pre-market, or you can set your orders in there. So you'll find out more information. Rob's going to drop something into the live chat, and you can learn more about how you can trade US companies, pretty much anytime you want to. So you can find out basically how you can place those orders, and it's just a bit better of a user experience and functionality. So that's super cool. Now, let's jump in. I'm going to share my screen as always, and we're going to go through some companies. Okay, so as you can see on this page here, and I hope I've got this right, I'm just going to check it for you guys. Wonderful. Okay, so if you can see that, just let me know, please. So here we've got our standard spreadsheet that we always use in our lessons. So normally what we talk about, or our sessions I should say, so we've talked about, in the past, different companies, we've put them in our spreadsheet, we've gone through our checklist. That was only recently. That was a heap of fun. If you need to, go back and listen to that and watch that episode as we talked about a checklist, building your own checklist for companies. We then created a portfolio for children, just a very kind of simple portfolio. We talked about, this was actually my notes on a different episode on the passive income portfolio. And today we're talking about FAANG stocks, aka MANG stocks. That's it. The pre-market trading is live. So Rob's just chucked that in there. Thanks, Tim, for saying that you can see it and it's all good to go. Now, so we're going to talk about each of these companies and hopefully we're going to have time to run them through a bit of an investing checklist. And then we'll conclude with basically what's our favorite from the bunch. If you have a favorite, I'd love to know what you think already in advance. Tell me now, which company do you love and why of the FAANG stocks? If you're new to FAANG, I should have cleared this up. It's an acronym. It stands for Facebook, Apple, Amazon, Netflix, and Google. So these are the companies right here. And you'll know there's been a few name changes over the years. So it used to be Facebook, Apple, Amazon, Netflix, Google. Now it's Meta, Apple, Amazon, Netflix, and Alphabet. So I don't know what that equals, but maybe we can make our own one up at the end. Apple indeed, says Tim. So Tim, I'd love to know what you think. I own Apple shares. Full disclosure, the two that I own are Apple. And I also own Facebook/Meta. So Zamasu, welcome back to the session. It's great to have you. So you've said Amazon or Microsoft. So Microsoft is another one in here. It's not actually part of the FAANG, but I reckon it should be. It's just that it's not really a modern technology company. Well, when I say modern, it's been around since the 80s. So where do we find the checklist? There's a question that's come in, and where do I find that checklist? Well, the best place to find it is on the SelfWealth YouTube channel. There's an episode we did on it, and you can find out all the information there. Okay, so here we go. Let's jump into SelfWealth. We can see here that the market is down today. Well, at least it started a lot lower today. And if we just dive into this, we can see if I had shareholdings in here, I could see where my cash is, where my assets are, liabilities, and I could basically just tell how my portfolio is performing. Now, I want to bring something to your attention here. Amit says Meta. That's a controversial one, Amit. Why Meta of the Facebooks? Oh, of the FAANG stocks. That's fascinating. That's really interesting. Okay, so people this morning are freaking out on the stock market, and I just want to get to this real quick. So as you can see this morning, when the market opened, it fell sharply, very sharply indeed. And this is because of what we believe to be the Omicron strain of coronavirus. We saw markets late last week start to sell off and get what we would call in finance the jitters. I don't think I've ever used that outside of this video right now, but the market got the jitters, investors got the jitters, and the market was sold off. I want to kind of just really quickly clear the air on something. Did you know that the stock market, and this is the US stock market, on average corrects, that's a 10% fall before recovering, it corrects once every 357 days. So maybe I'll bring up my screen here just to emphasize the importance of this. The stock market on average corrects, that's a big drawdown, a big fall, every 357 days. When I learnt that statistic, and that comes from a Deutsche Bank study that I found when I was reading Market Watch, every 357 days. If you're a long-term investor, if you plan to own your shares for the next 3 years, the next 5 years, the next 20 years, you can expect to experience a pretty big, scary patch, at least on average once every year. So that's pretty hard in the old psyche up the top here. It really tests your resolve. But remember, what that says is, if I am a long-term investor, I am willing to accept that there's going to be some tough times. And so this is why I say stock market investing is not until the next market crash, it's for life. Stock market investing is for life, not until the next market crash. And if you're like many of us that have thought this before, I can time the next market crash. A market crash is around the corner. I'm going to get out now. Chances are, if you're fearful before the crash, you're going to be even more fearful during the crash, which means that at that time, you're probably not going to buy back in and you're going to miss the dramatic rise. And so, as long as we have a quantitative easing and we have governments that want to support asset prices, I think the stock market's a pretty good bet over the long run. And when I say long run, I mean 10 to 20 years. So let's bring this up. We're going to go FAANG stocks. I shouldn't have done lowercase because it's an acronym, but that's okay. We're going to add in our watch list. We are going to add in, we've got Facebook / Meta Platforms. We have Apple, AAPL. We have Netflix. And by the way, guys, we've done an episode on Netflix, a session on Netflix before. I said episode because I normally think of Netflix as episode. We've done one on this before, so we might spend a little bit less time on that. You can go back, I think it was about a month ago, we spoke about Netflix in detail and we spoke about the profit margins of the business going forward. So which company am I missing? Amazon. I remember looking at Amazon shares. I'll get this up in just a second. I remember looking at Amazon shares and thinking to myself, man, that's expensive. That was at $300 a stock. And now it's $3,500. So, I mean, yeah, I remember looking at Amazon, so full disclosure, around this time. And look what it's done since then. Incredible stuff. Okay, so we've had some great comments come through here. So, Meta says, Amit, Plant One said, owns Facebook and Berkshire / Apple. Yes, that's right. Berkshire is, I believe, the biggest holder of Apple stock. So if you own Berkshire Hathaway shares run by Warren Buffett, you would actually have some exposure to Apple in any case. And so Tim's actually replied to me here, which is great. Thank you, Tim. You've said, Apple has great products, lots of cash, and with new Apple Silicon driving laptop computer sales, I believe PC are going to have to play catch up to achieve the speed and battery life. Agreed. Zamasu says, Apple, 30% App Store and in-app at risk. Also, Tim Cook doesn't understand innovation. Very fascinating, Zamasu. That's very fascinating. Tim Cook can only milk profits, not a visionary like Jobs or Musk. Wow, big statement, Zamasu. Tim says, Apple Silicon is a huge innovation, but yes, he is no Steve Jobs. And Oscar says, interested to hear your thoughts on the future of Google once third-party cookies are dead. Wow, okay. And Plant One says, I remember Amazon at $100. Yeah, well, you and me both, mate. We're experiencing this kind of envy as the stock's gone up. Okay, so what I've gone ahead and done to save a bit of time for us today is I've downloaded the 10K reports. Now, so if you don't know what a 10K is, let me just clear this up for you really quickly. And I might just type it on the screen so you can see what I'm talking about. In Australia, so Australia, USA. In Australia, we have annual report. In the United States, they also have annual reports, but what they call it for short is a 10K, and that's what it looks like. In Australia, we also have a remuneration report. If I write that correctly, a remuneration report. In the USA, they have a proxy statement, right? And so these two things are basically the same. Now, to say basically the same, from a high level, they look like they do the same thing. Jim says, hi, Owen. Hi, Jim. Good to have you with us. So when we're looking for financials, we would go to the 10K. And when we're looking at like business and financials, I should say, financials and business. And when we want to understand more about management, we go to the proxy report. So management and kind of team, that type of stuff, we would go here. Now, I just want to bring this up here because it can be confusing for new investors. Remember that you can come in to the SelfWealth platform and click on the News and Announcements tab, and you can find a heap of information here, a heap of information. So be sure to have a look through there if you want to keep up to date with your companies. Like just the fact that there's this news in here is really interesting, and it's great to have. Initiative says, if you are an early investor and don't have so much to invest in Amazon, etc., would you suggest an ETF? So yes, I cannot give personal financial advice. I just want to make that clear. But what I would say is and someone else mentioned this at the top of the show, which is a fantastic question, is if you can't invest in Amazon, so we've got $3,500 for a single stock. By the way, that's in US dollars, I believe. So that can be, a fair chunk of cash. Or if you want to go Alphabet, which is a stock that I was fortunate enough to buy a few years ago, and now it's $2,800. That's a lot more than Commonwealth Bank here in Australia. And so you can use ETFs to get exposure to these. So we've talked in the past about the FAANG ETF, which is this one right here from ETF Securities. That's one way. The other way is you can use the NDQ ETF from beta shares, which captures the whole NASDAQ 100. And so if we look at this over a long period of time, you basically get the stock market's performance, aka the NASDAQ. So good question. Okay, so we've already had some fantastic conversations in here. Craig asks, what is the smallest size companies that you follow/invest in? Me personally, Craig, I've bought shares in companies that are $20 or $30 million in market capitalization. So market capitalization is the value of all the shares in circulation, or the price of all the shares in circulation. So if you had to buy all of the shares from every investor in Apple, it would cost you, where is it? Here it is. It would cost you $2.6 trillion. You would need to have $2.6 trillion to own all of the shares that currently outstand in Apple. So the way you get to market cap is you multiply the share price by the number of shares, and that's what you get. Now, let's start going through these. So let's start with, maybe we'll start with F, because F is the start of the FAANG. So let's look at Facebook/Meta. This is a company I own. Remember, I bold the two that I own just so for disclosure reasons. So Facebook/Meta, let's go into it and see what it does. I'll try and answer the questions, by the way, guys, as we go through. And I'll give you when I say answer, these are my opinions. They're not necessarily, if I talk about a forecast or I give you my opinion on something, it's not necessarily me saying this is going to happen. It's more so me saying this is what I've found. And I think that's what investing is all about. It's a really open-ended question. And so if we zoom in a bit here, I'll bring this up. Meta Platforms, formerly known as Facebook Inc., is focused on building products that enable people to connect and share through mobile devices. Its segments include Family of Apps, Facebook Reality Labs. Family of Apps segment includes Facebook, Instagram, Messenger, WhatsApp, and other services. The Reality Labs segment includes augmented and virtual reality related consumer hardware, software, and content. So that is a mouthful. Thank you very much, Meta/Facebook/Mark Zuckerberg. So let's take a look at it. When we come in and we look at high quality companies like this, I mean, you can come in and you can look at the share price and you can see how it's performed over, say, 10 or 5 years. By the way, I'm a very big fan of the 10-year chart and the 5-year chart, not a 1 year or 1 day or 10-minute chart, because the reality is that as long-term investors, you want to look at the company's performance over time, its operating performance, not necessarily its share price. And the only way you can get a true sense of its operating performance from a share price chart, I believe, is to study it over a long time. So let's jump in here. Let's look at some of that operating performance. And when I'm saying operating performance, what I actually am saying is many investors, and I'm not just going to say new investors, but many investors look at the share price of a company to judge whether that company is good or not. And so I was actually on television not too long ago. This is probably going back maybe a year ago now. And I remember talking about a company, and I was on with another professional fund manager, or professional investor, I should say. And we were asked about a company. And I said, oh no, I don't think it is a very growth focused company, so I probably wouldn't invest in it. And she said, this is the other guest said, well, I strongly disagree with Owen because the share price has gone up. And I thought to myself, as an investor, I'm not looking for the share price to go up over a month or 2 months. I'm looking for the business to grow. That's what I mean. I don't mean share price. And so if we look here, we can look at Facebook's business and we can see that over time it has grown its revenue. And this is what I mean by growth. I bought the shares quite a while ago, so I've been fortunate to hold on to it through this period, or at least some of it. And we can see in here, we can see revenue growing over time. The other thing that we can see, if we jump down to gross profit, you will remember from previous episodes, you can see here that gross profit is also extremely high. So notice that the distance between these two lines is very tight. There's not much of a gap. And what that tells you is Facebook's revenue is very high margin. So that's what we can see there, because the profit is rising very, very fast. Now, if we drop further down the income statement to operating income, by the way, see this thing right here? I'm just going to take that and chuck it in our list of jargon. In the USA, they say operating income. In Australia, we might say something like this. Sometimes you could use EBITDA as well, but that's basically what we're talking about here, just so you know. They also say, in America, they say net earnings or just earnings, and we say net profit, sometimes expressed as NPAT, just so you know. So if we look here, now we can see the operating profit of Facebook also rising rapidly through time. Why is this important, Owen? You're probably wondering. Well, first of all, obviously we can see that the business is profitable and it is growing. The operating profit, this line right here, basically tells you after paying all of the costs like server capacity, all of the electricity bills, and paying for like administration staff, for the sales teams, and the research and development, like all of the software engineers, all of that stuff down here, this is what's left over. And this is probably the best finger on the pulse. Look at what a company is doing from a profitability perspective. Here's a big question. Comes from Seaman Kozimans. I love this question. It says, do you think the stock market is about to crash? And I would say, unfortunately, I don't really know the answer to that. What I would say, though, is that if it does crash, I'm going to buy more shares. I am not going to sell. I am actually going to take all of the money that I have and invest more of it. And the reason that I would do that is because, one, I've got pretty, good financial situation. I've paid down my debts, or at least, I still have a mortgage, but I've paid down most of my consumer loans and that type of thing. But the other thing is, if I'm going to buy a business, let's say I was going to buy Facebook here, why? I wouldn't wait. I wouldn't wait because the business is actually going to grow over the next few years, I believe, rather than go backwards, even if the stock market crashes. So I just bring up this chart here because this is kind of an introductory to how I analyze FAANG companies. I'm looking at that profit margin widen. I want wide gross margins. And this is the reason why Facebook and all of the big businesses have done really well. So, Seaman, I don't really... I'm not predicting a market crash. I just know that they're inevitable because that's the way the human race tends to treat business and the economy. And so, to be honest with you, I don't necessarily get scared of a market crash. In fact, I kind of look forward to one because it gives me an opportunity to buy businesses cheaper than I might otherwise. And here's from Nora, who says, it is always about to crash, smiley face. And that is the truth. It is indeed. Everyone says, I think we're overdue a market crash. And I say, well, we might be. And technically, we are getting closer to the next one than the last one because we are moving forward. But, at the end of the day, I think it's all, about the long term. And if you look at the long term, what I always come back to is companies solve more problems. And speaking of problems, Facebook has had a few of them. So you will know that the hashtag delete Facebook move, so we've got delete Facebook. You would have known in the news that this was a big deal, right? But what a lot of investors missed with this is Facebook already owns WhatsApp, it owns Instagram, and it owns a bunch of these other businesses. So when people were deleting Facebook, they actually just went and used Instagram or WhatsApp anyway, in which case they were still using a Facebook account. And so Facebook has over 3.5 billion users across its platform. So here it is. And if we scroll down, I just want to show you one more thing in these accounts before we move on to the next company and I give you kind of my overview of Facebook. So the brilliant thing about the way US companies report their results is that management has to tell you what the risks are. So they have to tell you. Whereas in Australia, they don't have to tell you that. They can just say whatever they want, really, and they can just say it and people get suckered into it. But in the US, they have to tell you what the risks are. So you look at the risks of the company. You can read this in the first 30 pages of a 10K just about. So you read it and you go through and you understand what the business does. and you get to understand the risks. And I just think that's fantastic. They do half the analyst work for you. You don't even need to do it yourself. So the other thing is, the other thing that we'll get to in just a minute inside here is we can look at the financial results and we can read management's discussion. You can see that right here. We can also see that the key data that management want to show us. So we can see revenue going up over time. We can see explanations for why revenue might be going up over time. You can see what management look at, how they're calculating certain things. And so I think the big thing here from FY20, this is going back a little while, is Facebook's daily active users were up 11%. Now you might be thinking, only 11%. It doesn't sound like a lot, Owen. So you're saying 11%, it could be faster than that. But remember, they've got 1.84 billion people using it every day. And at the time, this line item right here, Facebook users, that only included the Facebook.com, the Facebook app, and Messenger. Everything outside of that, like Instagram, WhatsApp, and all that sort of stuff, that was this one down the bottom here. And if we look at the monthly people, so you only have to check in once on one of the apps every month, 3.3 billion. So it's a fantastic business, Facebook. The thing that I would say, is it inside our circle of competence? Remember, we talked about this a few weeks ago. Invest in what you can understand. I would say most of us can understand Facebook. If we just read through the annual, the 10K here, and we read the first 30 or 50 pages, you would understand Facebook's business very, very well. So yes, we could understand it. Is it run by great management? Wow. Tell me what you think. Is Mark Zuckerberg, this is him right here, the founder of Facebook, is he a good CEO? I would love to know what you think. And while you're typing in your answers, I can see a message here from Adam, who says, a good friend of mine started buying short ETFs during the COVID crash while I was buying stocks on sale. He's still waiting for the next crash. That, Adam, is what I see all of the time. A lot of newer investors in particular think, I'll just wait for the next crash. Or, I need to get some protection. I'll buy a short ETF or a CFD or something really scary. This can protect me. And then only for it to really hurt. Really hurt. I heard another shocking story of a young lady, a 26-year-old, who during COVID put half of her superannuation in cash and half of her superannuation in the conservative option because she read it on the news. At 26 years of age. That is not the right thing to be doing with your money at that stage of your life. And as we all know, between March 2020 and yesterday, the Australian stock market has risen 50%. So she has potentially missed out on 50%. So it seems no one is game enough to tell me whether Facebook CEO Mark Zuckerberg is a good CEO, which, Zamasu actually did say something. Zook is a shrewd CEO. You said Zook, Z-U-C-C, which is slightly different to how I spelt it, but that's okay. So that's what threw me. But you said shrewd CEO. And I would agree with you. Now, when I say great management, I'm not saying great bloke, and I'm not saying kind person. I'm not saying any of these things. I'm just saying a management team that grow the business. So look at the scoreboard, says Matthew. Tim says, in terms of growing the business, yes. And I would agree with you because the business has grown pretty well. So I'm going to say yes. What's the competitive advantage? Now, this is a tough one. I think for Facebook, if we go back in time, you'll remember when we talked about moats. It was about 6 weeks ago, I think, just off the top of my head. We talked about analyzing management's ability to execute. And we talked about using these brilliant metrics in here. Things like return on average equity was one of the things, but the big one you'll remember that I said that I love is return on investment, and particularly return on investment over a long period of time. And we can see here the 22% return on investment. That is effectively saying, that's Mark Zuckerberg saying, over the last 5 years, if I put an imaginary money box in front of you, you gave me $100, I'm going to turn that into $121.94 within a year. And that is a pretty impressive return. If you can find, ladies and gentlemen, if you can find a company that can do this for 10 years from now, please send me an email or find me on Twitter and let me know which company that is. In fact, let all of us know, because to return 21% every year is really impressive. Now, this is not the share price. Remember, this is not an investment return on the share price. This is an investment, what the company is investing its money at, what can it get back for that? So we've had some great ones here. HCB008, don't know your name because it's HCB, but you've said, I'd say being the founder of the business is a good sign for being a CEO too. I would agree with you. So there are numerous studies which show that founder-run companies tend to perform better than ordinary companies. So we're going to say the competitive advantage, it obviously has one because its return on investment is so high. I would say the network effect is very strong, and ultimately the scale. So the market for online advertising, by the way, is probably going to grow to $500 billion over the next 10 or so years. Facebook is actually positioning itself for something else, which I'll get to in just a minute. Is the company growing fast? Now, I'm just going to lean on the SelfWealth platform here, thankfully. When we go into forecast down here, then we can drop down and we can see what analysts are forecasting. So we can see their price targets. We can see what revenue forecast they're giving. So you can see here that revenue is forecast to grow. We can see that EBITDA, which is basically a measure of free cash flow, is growing. When we go to net profit, we can see net profit is still going to grow, even though it's off a smaller base, still going to grow. No dividends are expected. So this is a growing business, and you remember we like this for a few reasons, because growth can heal a few wounds. Now, I've got my own discounted cash flow analysis on Facebook. I've done my own work with my analyst team, but I'm just going to lean on the data here from Refinitiv inside SelfWealth, which is brilliant. It's great to have this type of data just for this kind of quick eyeball look at things. And we can see, I'll just click that again so it doesn't annoy me too much. We can see that the current recommendations from analysts are, and the average price target. Now, what I'm saying with this is, I'm not telling you to go and find the company with the highest price target. I think that would be a mistake. This is only one part of the overall investing pie. Remember to go back in those recent episodes and discover how you can create your own price target and do your own research into a business. Because this will change. Look, it was there. That's today. That was last month. That was 2 months ago. That was 3 months ago. So the point is that over the long term, these types of things are transient, they're passing, but the quality of a business is what stays. You're paying for the future of a business, not necessarily what's happened in the past, and price targets change just as frequently as just about everything else in investing. So $401 is the average price target, which is well above the current share price. So I'm going to say yes, based on analyst consensus. So that's on analyst consensus. ESG scoring. I'm adding this in because we spoke about ESG a few weeks ago, and I just want to show you how you can kind of work it to your advantage. So if we come in here, we can see, where am I, Owen? Need to go back. If we scroll down, we can see a C negative rating for Facebook's ESG, and it gets a pretty poor rating for environmental, and the controversies is where it really gets knocked. And you'll remember from Facebook with Cambridge Analytica and just about everything else, it has had a bad rap. For one reason or another, it's had a bad rap. So it's not the greatest rating, but we'll just chuck this in here and we'll say C minus, I think it was, just to get that there. So we can kind of benchmark them across this. Now, I currently own shares in this, and that could change, to be honest, in the near future, because although I think Facebook is an incredibly impressive business from a financial perspective, most recently the company has announced that it will be moving into something which is, if I go to, what can I search? Oculus. So the new way that Facebook is going to be coordinated as a business is basically WhatsApp, Messenger, that's Facebook Messenger, Instagram and Facebook, the core business of what Facebook is today, is going to change all into one kind of business unit. And then the other unit is going to be this one right here. It's called Facebook Reality Labs. And I don't know if you've ever seen these guys. Maybe I'll just show you. So a few weeks ago, because I own Facebook shares, I thought, hey, if I'm going to still be invested in this business, I want to make sure that I understand what he means when Mark Zuckerberg says the Metaverse is going to be hundreds of billions of dollars in revenue opportunity. And why is he investing $10 billion a year into building the Metaverse? And so I went and got a set of these Oculus devices and I chucked them on. And you get these little handheld kind of controllers and you can move around. You can swim, you can ski, you can watch movies, you can watch the Batman movie in virtual reality and look around. It's a heap of fun. And what I'm doing with these goggles is I'm actually taking them around to friends and family and seeing how they react to it. And the Metaverse is basically, instead of seeing the internet, so instead of just looking at the computer screen right now, you might be in it and you might be able to look around me here and see what I'm looking at and interact with me. And that's the difference. And obviously this presents a huge opportunity. Now, the thing that I got asked on the telly the other day is basically that I think is it going to work? And I from all of the research that I've done, Facebook is definitely one of the world's leading companies in virtual reality and augmented reality. But it's way too early to tell for sure which company is going to win. This would be like trying to predict Amazon before there was Amazon and the internet. So this is both a key growth opportunity for Facebook, but it's also a key kind of risk because do they spend too much and not really make it a victory? There is a company that Facebook bought called Control Labs. So Control Labs is a totally fascinating business and it effectively allows you to control devices with like a wristwatch or something on your wrist, and you can control and move things, and you can control drones and all different types of stuff. It's actually a fascinating business, and I can't see it here in The Verge. Normally there's an article, a video of it, but we can save that for next time. You can go and have a look. So ultimately, I think Facebook is a very interesting business with a very strong business, but it's also one that doesn't come without risks. So, in terms of my ranking here, I own it, but I'm just aware of the risks. So we've got some questions here. We'll move on to Apple in just a minute. So Oscar says, Facebook makes money from ads. Facebook have the most amount of customer data to offer for targeting. Yes, they do. I think a good question that was brought up before was basically how do they respond to cookies? And basically the changes that Apple and probably other companies are going to make in time. That's the key, Oscar, is that Facebook has so much first-party data that it can effectively make its own customer profiles and avatars on the back end and still target people with ads. I'm still getting ads on my devices for investment firms because it knows that I'm interested in investing. I think the biggest risk to Facebook from an advertising perspective is if they can't win the hearts and minds of millennials and younger Gen Zs and all that, because not many young people use Facebook anymore. In fact, I think the entire industry is shifting away from social media platforms, and I think it's transitioning to entertainment platforms and gaming platforms, which is why all of these companies are investing massively in gaming and virtual reality, because they know that that's the future. Young kids these days, and parents, you will know this, young kids these days, they don't come home and sit on Facebook. They come home and they sit on Roblox. They sit in a gaming environment and they communicate with their friends, build their own worlds and have discussions and communicate that way. And I think these companies like Roblox and even the game publishing houses like Activision, they're the ones that really stand to benefit from this. So Manchuk, I haven't actually looked at LCID. I don't know what that is, so we can just have a quick look at this. I actually don't. Lucid Group. I have no idea what this business does. So, formerly Churchill Capital is engaged in manufacturing electric vehicles. Actually, yes, I do know Lucid. We did do an episode where we talked about Tesla, so I would refer you back to that. And I've talked about Manchuk. I've talked about Rivian, which is the other one that's IPO'd recently. And we talked about that on the Australian Investors podcast, so go and check that out. A few more questions in here before we move on. Past Assault says, should call it Matang now. Matang, M-A-T-A-N-G. Okay, so we've got Metaverse, we've got Meta Systems, we've got Apple. What's the T for? We've got Alphabet, we've got Netflix, and we've got Google. What's the T for? That's an interesting one. Is that Tesla? Pastor Salt, I think it is. Okay. Those superannuation stories are scary, says Adam. I agree. I've heard of people checking their super daily like a trader. I don't think I've looked at mine other than at tax time. Agreed. Is it right, this is from Vinod, says, is it right to say that Facebook was advertising and Meta is about commerce, like play to earn model, like Axie Infinity? Yes, I would agree. So the new Metaverse technology, I would say, is more about building an ecosystem rather than advertising in it. However, I don't know how that works. Benjamin says, Teladoc. Yeah, Teladoc's been really sold down lately. This is a really interesting business, fascinating company. We could probably do a whole episode on this, but it's actually fallen, I think, about 60% from its high. So this is a business that it's like telemedicine. It's a really, I'm not doing it justice, but basically a very fascinating, fast-growing technology company that's been sold down. Roku, another really impressive business, as Antonio has noted. Roku, just quickly before we move on, Roku is basically it's like the backbone for smart TVs, so a fascinating business. And Pastor Salt says, yes, Tesla. Okay, so someone did say, I think it was Tim, I think it was you. You said Apple is your preferred company of the lot. So Apple creates the wonderful devices we know and love. The Apple iPhone, I'm filming this right now on the latest and greatest Apple Mac Pro. I was fortunate to buy this Mac Pro not too long ago. And it enables me to do these SelfWealth Lives, even if I'm on the road and not in the studio. So here we are today, streaming to you live through an Apple device. And by the way, it's also streamed through my new Apple 5G iPhone. So we've got Apple on Apple. And I've also bought the mouse and the keyboard to go along with it just for my troubles. And I've got my AirPods in. So you can see here that I spend more on Apple probably than I've invested in the company, and that's because I'm one of their super fans. So yes, I own Apple shares. I think it's a fantastic business. And the flags should be US, not on AU. Yes, so that's right. Plant one, this flag here should actually be US. That's right. We'll just have to fix that up. So Benjamin says, Teladoc will be 100-bagger. Kathy Wood owns more of it than she ever did with Tesla before 2019-2020. Spike in the stock price. Yeah, so then before Tesla spiked. So so Apple, if we just come back to Apple, what does it do? You and I know that Apple creates iPhones. It also creates the iPad, the MacBook, and the iMac. Now it creates the watch. I forgot my watch. I've actually got my watch on my arm as well. I bought one of them not too long ago and has changed my life, changed my exercise. It also, there are not many companies in the world that can sell you a $30 cleaning cloth for your iPhone. So if we come into financials and we come into ratios, actually, we'll go straight here and we'll look at management effectiveness. If we look at return on investment for the last 12 months, 42%. This is basically saying over the last 12 months, Apple's taken all of the money that it had available to it and made $42 more. So this is, like my analogy before, if you'd add up all of the debt, all of the cash, and all of the equity, and you've basically said, or just the cash and the equity in this instance, net cash, you're basically, sorry, not net cash, just cash and total and debt. You're basically saying how much of a return has the business made by investing that money to turn it into equity. Incredible business, also pays a very small dividend. Over the last 5 years, 26% average return on investment. Wonderful, wonderful, wonderful. Yep, so Rob's just acknowledged that one there, plant one, great spot on the US flag there. So all in all, Apple is a brilliant business. And if we go into the annual report or the 10K, which we've talked about already, this one right here, I believe it is. And if we type in something, I'm just going to go segment. Now, if we drop down and we find the segment performance, this is how Apple reports it to us. It reports us by, geographical segment, and it will actually occasionally report to us across different products. So it's got products like hardware, so selling the MacBooks, and then it's got services revenue. Now, this is a really interesting turn of events that we find ourselves with Apple. Apple is, in my opinion, the greatest hardware manufacturer in the world. Some people might say now that that's Tesla. But the ability for this business to grow rapidly at scale is second to none. 23% growth in the Americas is what has been achieved. 30% growth in Europe. 70% in China. 33% in Japan. 35% in the rest of Asia Pacific, including Australia. This is a business that is worth over $2 trillion and is growing in some parts of the market by 70% in 1 year. 70%. Incredible stuff. So incredible. And I think many people think just because it's a massive business, it can't grow. But just in terms of the learning from this, ladies and gentlemen, every company has to have a segment report. And the segment report is wonderful at telling you what goes into businesses and how they're growing. So, if we look at a business like Apple obviously has dozens of different business units underneath it, but they actually have to tell you how do they see things and what does it look like for them? How are those different segments operating and performing? And that's what we call the segment report. We have them here in Australia as well, so be sure to use the segment report. And we have them in both Australia and the US in our annual reports and our 10Ks. So have a look at those. Now, I think Facebook, Apple, I've got to be quick here. We might have to do the rest next time. But I think Apple is probably my pick of the bunch for the FAANG stocks because it is doing something that people have underestimated for a very, very long time. And that is, it actually is transitioning its business to become more software oriented. Now, people have said that forever Apple is a hardware company, it creates iPhones, etc. But the reality is that it's actually becoming a software business. Apple now has more than 500 million paying subscribers of things like Apple Music, Apple News, iCloud, all of these things, more than 500 million. This is an incredible business that's operating at scale. So I'm going to say, yes, it's growing fast. Yes, it's within my circle of competence. Is it run by great management? I would say yes. There was a criticism earlier on of Tim Cook, who is the CEO. He's been with the company an extremely long period of time. I agree that he's not Steve Jobs. He's not, a Bill Gates. He's not a technical, brilliant mind like that, and he's like Gates is, and he's not the design visionary like Tim Cook was. Steve Jobs was. But he is a brilliant CEO nonetheless. Zamesu says Tim Cook is a great CFO, but an average CEO. Well, I kind of agree and disagree in some ways. I tend to agree that he's brilliant financially speaking. So if we look at the business, and I'm sorry to get deep in the weeds on this, but if we look at the business and we go to financials, we can see, yes, revenue has grown, but what we can also see, and this might be your point, Zamasu, you might be saying something like this, is basically that, the business has got a lot more leverage in it. It's basically gone from being debt-free to then having a lot of debt. So if we go total, we've got long-term debt here, total long-term debt. Why don't we just go total debt? There we go, just like that. We can see that over time, the company has got more debt, and that's because it's been able to take on debt at very low interest rates and then, fuel its business. And that is what's boosted its return on equity. So if we go into ratios and we look at return on equity, it is off the charts at 147% for the last 12 months. Just a side note here, guys, we talked about this last time, but return on equity, the reason that I use return on investment and not return on equity is because return on equity just measures the profit against shareholder equity, net shareholder equity, which doesn't necessarily capture debt. So we want to know how much debt does it have, how much cash does it have, and what's the return on that as well. And that's why we've got this here. So I'm going to say, if we just look at the Apple's business, I think it's a brilliant business. I actually still think it's undervalued personally. So if we come into forecast yet again, we come down here, we can see, and if I zoom in a little bit more, we can see that the average price target is $168, and that's slightly above this. So we know we're not going to take it we're just going to take it with a grain of salt, but we're just going to, a pinch of salt. So we're going to go yes, slightly. What's the competitive advantage? Well, once you start using iCloud and once you start using an iPhone, you very rarely go back. What's the saying? Once you go Mac, you never go back. That happened for me in 2014 and I've never looked back. So I'm going to say it has a competitive advantage. The other company which I actually forgot to bold that I own is actually Google. So I might just jump to this really quickly. So Google is a brilliant business. And now if we look at the segment report of Google, Google makes most of its money from its advertising. So if we drop down here, we can see the search business. This is when you Google cute cat videos. You Google something, there's a cat video, but then you might see some advertising, like if we go cat toys, like this. So we can see here all their sales and stuff going on the side here. We can see the ads up the top here. We can see ads down the bottom typically. We can see kind of ads everywhere. And that's basically how the business monetizes. For many years, Google has never monetized its maps, or at least it hasn't done it effectively. So when you click through to a map, it really hasn't done that effectively. It's only started monetizing its videos recently. So here on YouTube, which is where we're all hanging out today, over 2 billion people use YouTube. And you can see here that it's still growing rapidly. So between 2019 and 2020, it basically made an extra $5 billion of revenue. The other things we can see is Google's obviously making a big bet on the cloud, so enabling businesses to go to the cloud with its GCP platform. Google services, as a whole, make up the majority, but this Google Cloud business is going to grow. One of the things you might be wondering why the business is called Alphabet and not Google. Now, the real reason is because for legal reasons, it helped them deflect some of the business risk. But the reality is, underneath Google's hood or Alphabet's hood, there are a bunch of different businesses, and there's basically a business inside of Google as we know it, but inside of Alphabet for every letter of the alphabet. So, Alphabet is basically, if you went from A to Z, you would find a company inside it that represents that letter. And so like one of the businesses that you never see is Waymo. So Waymo is a business that's within Alphabet. And here you go. According to this article from Reuters, it was rumored to be worth $30.5 billion. You might know a bunch of other businesses. So Alphabet businesses. There are a bunch of other businesses underneath this, and you can see Verily, obviously YouTube's one, Waymo's another. There are a heap of different businesses within it, and some of these businesses now are starting to be sold on the stock market. Nest, Calico, all of these different businesses, X, so many wonderful businesses inside of Alphabet. But the thing is, when you look at the financial statements, so if we come back in, where are we? That's Apple, this one. If you look at the financial statements, they put it under something called Other Bets. Now, Other Bets basically doesn't produce any revenue. And so when you look at the financial statements, you actually find that the business itself just looks like it's going backwards. But this one division right here has businesses potentially worth tens, if not hundreds of billions of dollars inside it. And no one really knows because they only look at the income statement. But this business right here is very, very powerful. Now, I know I'm running out of time here, but when I did my valuation of Alphabet shares, I basically took all of this and I said, what's the valuation of those? And then all of the other stuff like Waymo, the self-driving cars, all of the other businesses inside of Alphabet, I basically said, we won't think about them, but if they happen to do something good, then that's bonus for us. And they're now starting to do something very good. So, Initafar says the FAANG Plus ETF pays a dividend as well, right? Yeah, it probably does, but it also pays distribution. So distributions can be a return of capital, just so you know. It doesn't necessarily have to be a dividend for you to get something. So let me translate that into English. if you own this ETF, which just invests in the FAANG stocks, plus a couple of others like Tesla, and at June 30th every year, you get some money back from ETF Securities, the company that provides the ETF. You may be getting them because it's returning some capital to you, not necessarily profit or dividends. So it's a bit of a technical thing. We spoke about it in our passive income episode when we talked about dividends and dividend investing in general. So we didn't really get through the full thing today, ladies and gentlemen, but what I would say is you can probably go and fill this out for yourself. Is Google in our circle of competence? Yes. Is it run by great management? Yes. We've got Ruth Porat as CFO, and we've got Sundar Pichai as CEO, who's a brilliant CEO. Competitive advantage? Yes. It's the only internet browser on the internet. Is it growing fast? Yes, which is still incredible to me. Not sure about the valuation. I haven't looked that up. I would be fascinated to look at the ESG score for Google. I think this is going to be a really interesting result. If we've got it down here, it gets a C because of, there we go again, controversies. So it gets a C as well. Is the valuation good? Let's have a quick look. If we go back into the forecast by analyst, let's go in here. Let's scroll down. 3,200 is the valuation. 2,800 is the current share price. So according to analysts, that's yes, says analyst. So you can go and repeat this technique, what we've done by looking at these two companies here, which is Amazon and Netflix. We've been through Netflix in a previous series. What I would say, though, is of all of the FAANG stocks, in my personal opinion, I think Netflix is probably the one that will probably slow down first. Because in my opinion, out of it and Facebook, to be honest, it is probably the one that's facing the most competition from the likes of Disney, Hulu, ESPN, Apple TV. And this thing right here, this is, if we go to Netflix and we watch our favorite show like Stranger Things or Orange is the New Black or whatever was on there, the reality is there's a saying in investing that your product is my feature. And basically what that refers to is the service that Netflix runs, that is streaming television. Now all of these companies offer that now. Apple has Amazon has Amazon Prime Video. Apple has Apple TV. I was watching that list last night. Facebook has its own video and entertainment segment. Google and YouTube has its own original content as well. So, Netflix is still the number one in terms of its overall kind of, everyone knows Netflix for streaming, but it is the one that's probably the most at risk, in my opinion, from reducing return on invested capital over the next 10 years. I think Apple's a brilliant business. It's already massive, but who knows what else. So Plant One says Disney Plus is coming. Yes, Disney Plus. If you don't know, Disney Plus is owned by Disney, which owns just about every creative thing that you liked when you were growing up. And so this is a wonderful business in itself too. So we can have a look at the valuation of this, and we can see the ESG scores as well. Fantastic business. Oscar says AWS isn't going away. I totally agree. And hey, thanks for the shout out here, Modern Da Vinci. You've said, nice stream, Owen. If you haven't already, ladies and gentlemen, let's smash that thumbs up button and get this quality content out there. Thank you so much. Yeah, you can. There are two things you can do, actually. You can subscribe to SelfWealth's YouTube, or you can give us a thumbs up. I was looking at some old episodes that we did on SelfWealth the other day, and I was so pleased to see that we've had some good viewership of this series so far, and also that people have given us some thumbs up. So that's wonderful. So just to recap what we've done today, and I'm going to save the best thing for last, which is about market crash. But we've talked about Facebook/Meta Systems. We've talked about we talked a little bit about Netflix, but we talked about Apple. We talked about Google quickly. There's only so much we can fit in an hour. We haven't got to Amazon, which is a big shame, but go through there, have a look at the business model, read the first section of the annual report /10K, which you can get through SelfWealth or direct through the Amazon Investor Relations website. and read through it, listen to a recent quarterly call, jump in there, jump in SelfWealth, see what analysts are saying, and look at the financials, look at the return on investment. Consider yourself, have I used Amazon? Do I think this thing's going to keep growing? You can use ETFs to get exposure to these things, so that's a really important reminder. Fantastic tip for those of you that are new to investing. The ETFs can get you exposure to some of these companies. Napalm says Take-Two as well is a really interesting business. Take-Two is a fascinating business. Take-Two is a software, it's a video games publisher and software business. But if I could just sum up the FAANGs as a general look and feel. In my opinion, the FAANG companies, the biggest risk to most of them is regulation, because they are so dominant. They have so many levers they can pull. Let me give you an example. Everyone knows that Google search is basically the only search engine that people use. And you think, Google's pretty big, it's probably dead now. It's probably done, it's run its race. But, it was only last year that Google started allowing people to book their flights inside Google search. Now you can book tourism activities inside Google search. And there are so many other things that you can do inside Google. And this is an example of once a business gets enormous and has reach and customers all over the world, it has something that we call in analyst land, optionality. It has the option to try new things and do new things. And each of these companies have the optionality that I look for in investing. And so, I'm very happy to have 3 of the FAANG stocks in my portfolio already. I wouldn't be surprised if sometime in the future I own Amazon shares. And honestly, I think we've talked about, just in passing, we've talked about Disney, Tesla. Someone mentioned NVIDIA on Twitter with the handle #SelfWealthLive. So many great other companies that could be the future FAANGs. And then we've got even the Asian technology companies as well, which are a bit, in my opinion, a bit riskier. But the FAANG companies are quite awesome, if I can say that, because they're just really impressive businesses run by great people, growing fast with competitive advantages. They're basically everything that most investors would want. But there is one thing that I will say here. Don't go and invest all of your money in these companies. They're not risk-free. You've still got to build your diversified portfolio. Please go back and watch our passive income episodes. Please go back and watch our ETF investing episodes that we've done in the last few weeks. There's so much great content that we've done over the past month. So thank you, Modern Da Vinci, for reaching out and saying that. Nora says, sorry, I missed that bit. Is ETFS FAANG, is it actually includes FAANG stocks? Yes, it does. So let's just quickly jump back into that. So ETFS FAANG. So if we come in here, if we go here, we can see that I think it's a little bit more than just the standard FAANG stocks. Nora, so if we come in, we can see, here we go. It's got NVIDIA, which is the GPU, fueling the gaming internet revolution, kind of the Metaverse revolution. We've got Baidu in here, which is an Asian tech company. We've got Alibaba, we've got Twitter. So you can see all of these different businesses in here. So it's not just the 5 from the FAANGs. So Howard Wu says FAANGs with Shopify on the end. Next on the list, he says Shopify. Yeah, Shop's a great business. If anyone has any suggestions for future episodes, Rob and I love to hear your suggestions. And the best place to get in contact with us, surprisingly, is actually on Twitter or on the social media channels like on Instagram. Use the hashtag SelfWealthLive. That's hashtag SelfWealthLive. I'll come back to me now. SelfWealthLive. That is the way to get in contact with us. I'm at Owen Rask on Twitter. So at Owen Rask if you want to at me, and you can send me a message as well to say, hey, can you talk about this on SelfWealth Live next week? We'll be back next week at midday at 12. Maybe I won't try and fit as much in because there's a lot to try and cover today. So if you have some ASX companies, I'd love to know which companies you want me to take a look at. We've got a few things planned for Christmas, a few special episodes coming up in December, which Rob and I are super excited about. And the final piece about market crashes is that, remember, on average, the market corrects once every 357 days. If you remember that, you'll remember that we're not investing until the next market crash, we're investing for life. And so that will help you sleep easier at night. That will help you wait to find those opportunities and to take advantage of market sell-offs. Don't be one of those people that says, a market crash is around the corner, or I think it's about to crash. No one knows. No one knows. You know, I get to interview some of Australia's and probably the world's best investors as part of my other day job. And not one of them profess to be able to predict a market crash. So, and those are the people that do it for a living. Reflect that, and I think as investors we'll all do better. So Nora says, any Christmas deals coming on SelfWealth? Well, have a guess what, Nora? You're going to have to wait and see. You're going to have to stay tuned for emails, and you're going to have to come back to SelfWealth Live over the next few weeks, because there may be, wink wink, so keep an eye out for that. Wonderful to have you all with me today. Thank you so much. If you're out and about in Melbourne today, why not get some sun on your face? It helps you invest better. I'm pretty sure it makes you feel better too. So get out there, have a wonderful day, and we look forward to seeing you on social media, #SelfWealthLive. Bye for now. I'll see you next week, Monday next week at midday. Bring your questions. Thanks for watching.